Every year, India's GDP grows, businesses expand, people spend more, but here is a strange part, not every rupee you spend actually exists in physical form. So, who decides how much actual cash India needs to survive, and how does RBI make sure that we don't end up like Venezuela drowning in a worthless paper? So, this is called monetary policy calculation, and that calculation happens inside the RBI's most guarded department, which is called Department of Currency Management. Every year, RBI estimates how much money the economy actually needs. They look at GDP growth, inflation trends, and how many notes got damaged or returned, and how much reserve stocks banks must hold. All this go into a central forecasting model, which is called Integrated Currency Management System. That model literally predicts how much cash India will need next month by denomination and by region. While forecasting demand, here is how they decide. They estimate based on economic growth. If India's GDP is expected to grow, more transaction will happen, meaning more cash will be needed. Second one is replacement demand. Old, soiled, mutilated notes are continuously returned to banks and have to be replaced. Another parameter is reserve stocks and regional demand. RBI always keeps stocks for festivals, elections, rural market, remote areas, and uses feedback from regional offices and banks. If you look at macro factors, inflation trends, growth in non-cash methods of payment, interest rate, this notes and circulation is estimated using statistical models that actually goes into account. See, RBI does not print money when the government wants to spend more. It prints only when economy itself justifies it through something called real money demand. Think of it like this. If GDP grows at 7%, the demand for money might grow 7 to 8%. But if RBI prints 15% more, you have just added fuel to inflation. RBI also does something really smarter. It does not print more, it replaces more. In FY25 alone, nearly a quarter of all the newly printed notes were not new money at all. They were replacement of the old or the soiled ones that kind of reshape the mixture of cash, more 100 and 200s note and fewer high value notes. And if you really want to understand how this machinery works, how India decides what to print, when to withdraw, how to manage inflation, don't stop at this video. Read this book. It takes you inside the decision rooms. Go through RBI annual report and currency management section. It literally shows how many notes were printed and replaced. So yeah, that's how you move from hearing opinions about money to actually understanding how money itself is managed.